Hello and welcome to another Supplier Diversity and Small Business Economic Impact Weekly Report. I am your host, Jamie White. So I do want to start off and say that this is going to be the last weekly report of the year. So happy holidays and hope everybody enjoys your time off from your jobs and time with your family and friends and whatnot. Um, I also want to say before we kind of get into like this last weekly report, I really appreciate everyone for the continued support on these weekly economic impact videos that we do here at Supplier T News. Um, without you guys' support, definitely can make this happen. So, with that being said, let's go ahead and let's start the video that will end the year for 2018. Now, for a lot of you, obviously, the big piece, small business or not at this point, is the partial government shutdown uh, for the U.S. Now, I'm not going to get too into this and into exactly what's going on, like in terms of who's going to be affected, which federal workers, have to come in and be and not be paid versus the government employees that don't have to come in. It's more if you're an essential worker, you have to come in, but you don't get paid until after the government shutdown is over. But I'm more so going to talk about kind of what's going on in the economy right now, and yeah, and kind of what's going on and how this plays a part into it. Uh, so it's going to be a mixture of a couple of things here. But to start off for the partial government shutdown, it's funny. So in third quarter of 2018, GDP rose 3.4%. In the second quarter, GDP rose 4.2%. So over the past couple of quarters, and probably for the entire year, we're going to be looking at 3% growth, which is pretty good. That would be on the higher end of the Obama administration. So, for the was the second year of the Trump administration, it's hitting that 3% is really good and really strong, which proves that our economy is strong. Now, despite the economy being what it is, we're seeing a lot of negative things going on here, which is interesting, and we'll get into kind of why that is in a moment. But I think it's a combination of things, and the reason why I picked this article is because they basically said a couple of things that I was thinking about when it comes to why despite the economy being doing so well, it appears as if we're all falling off a cliff, and I think it's a combination of a couple of things, right? The first one is obviously the interest rate hike from Federal Reserve, which is the fourth time this year that happened. I think it was either this week or last week, which really caused the stock market to fall. Specifically, when we're talking about the stock market here. Uh, but I don't think that if the interest rates just rose, I don't think that would in itself would have caused this. I think it's a combination of that plus the U.S.-China trade war that's going on right now, and just the uncertainty there, plus the government shutdown in America, which is causing even further uncertainty, plus things like Brexit that's going on currently on a global aspect that is even further uncertainty. So there's just uncertainty on top of uncertainty on top of uncertainty, and what that's proving is that just even if you have a strong economy, if people don't know what's coming next on any front, that's going to cause the market to tumble. And it's 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 one of those things that it's one of the things that I've always kind of, if you've read if you listen to some of my other stuff and read some of the Supplier T News articles, it's one of the things that we saw a lot when it came to the Obama administration, where some years they would have a really strong economy, but the stock market in particular wouldn't reflect that. And the key to that is that people didn't feel, even though that the economy was strong, people didn't feel like the economy was strong, so other parts were suffering. And we're gonna talk about in the Obama economy, one of the big things that suffered into that would be business investment and consumption to a certain degree. So that kind of led to, in my opinion, an economy that was never as strong as it could have been. But if we're seeing that kind of happen now, what we could see is a slowdown of growth. Now, let's go here, and then that kind of is a pretty good segue to consumers. Increasingly prop up a U.S. economy that's set to slow down. So the key here is, I mean, these are all like in the first couple of paragraphs we don't want to talk about, but consumption accounts for 70% of GDP, right? Under the Trump administration. So in the Obama administration, it was around the mid 60s. But what we've seen is that that has continued to grow since the recession. So now that we're at about 70%. The key here, and I showed this last week about how a lot of people are planning on borrowing the most they've ever borrowed over the past or since the recession. So they're looking to borrow about $1,000 on average to pay for their holiday gifts and whatnot. With interest rates going up, and with the economy set to slow down, we're now going to see people have a harder time paying off debts. Um, and again, this is more so focused at small business, but just kind of letting you know if you are a B2C, this is what we're kind of seeing. So I do expect consumption to slow down. So obviously, you know, plan accordingly, but everything is set up for a significant slowdown. And that's something that again, definitely needs to be taken note of. Now, we'll talk about that a little bit later, but just something to really keep in mind. And I do think that what's going to happen is what's happening here. China's state planner had says to boost support of the economy. So basically, the Chinese government is saying that they are going to invest more heavily into their economy. If we've talked about this before over the last couple of weeks. The China economy has slowed down this year. I'm not going to say bad, but it hasn't been as strong as in past years. A lot of that has to do with tariffs that have been hidden from the U.S., which I've stated repeatedly that as wild as it sounds, it actually did work, and it has brought China to the table to negotiate. Now, the Trump administration, when it comes to negotiating, doesn't have the best of records, but they have gotten them to the table, which is something that very if I don't think any other administration in recent memory can really say that. So we'll see what happens with this, but the fact they've gotten to the table is a significant positive. But again, I do think that we're going to see next year is something similar to what China's doing right now, which is an investment into the U.S. economy. Democrats have taken over the House with a slowdown. I do think that is what should be expected some point next year. Don't know when, but most likely that's what's gonna happen. And we'll see how that goes. But the reason why I kind of had to pause is what nobody's really saying here is that the debt that's being taken on has steadily increased from the Obama administration to the Trump administration. So a lot of their growth for the Trump administration hasn't been business investments. It hasn't been kind of what they said it was going to be foreign investments, all that stuff. It may happen in the future, but as of right now, it hasn't. The majority of it has been debt, and if we have a slowdown, that means that there's going to be a need for even more debt, which I mean we're basically I see this slow turn to back to uh, an an economy similar under the Obama administration, where it's strong but nobody really believes it is, and we're just getting heavy investment from the government to kind of prop it up because even though we have a strong economy, nobody's really spending the way that they ought to, and we're just going to start seeing slow growth. Uh, don't see a huge recession, but I think that's kind of what we're headed to. All right, next up, the Dow had its worst week in 10 years. Yeah, so and this just kind of goes to what I was saying. If you're curious as to just how bad the stock market is, here it is. So the Dow Jones Industrial Average just ended its worst week since 2008, falling 7%. According to Bespoke Investment, the S&P is on track to have its worst December since 1931, when it dropped 14.5%. The S&P is down 11.4% so far this month. So most likely it'll continue just because I do want to note this isn't unusual. December does usually see a slight downtick, but because so many things are hitting it at once, we're seeing an exceptional downtick. Uh, as you can see, it just goes toward the Nasdaq fell into what looks like a bear market. We'll see with that. But it is around that number. So again, we're seeing a huge huge drop. And it says the same thing: rising interest rates, the China trade war. So everybody's pretty much saying the same thing on that front. What I do want to show you here is they show a table showing you the past when the S&P performance has has dropped 10% in a quarter, what happens the next quarter, as well as what happens the next year. And when you look at this, these are some actually really good numbers, right? So since 1946, whenever the S&P drops more than 10%, the next quarter we have a 78.9% chance of us increasing our our uh, or having an increase in the S&P for the next quarter, and you can see the average here is about 5.13%. In addition, over the next 2 quarters, we have a 73.7% chance of it going in a positive direction. And as you can see, the growth is about 11.228%. So, and then going even further over the next year, well, let's not get to next year because generally year over year it grows unless you're in a recession. So that's fine. But as you can see, just the quarter after it, we have almost 80% chance of it increasing. So although we're hitting pretty high lows here, I think really what we simply need is for people to get used to that there's an interest rate that increased to 2.5%, and that the government just needs to not be shut down, um, and they need to figure out what's going on with Brexit, whatever it may be. And once we understand what that is, I do think that it'll correct itself and it'll head into a positive direction. We just need to know what that is. And then lastly, this is probably wanted to end on the last note, but NPR has a pretty interesting about a 4 minute segment. It pretty much reiterates kind of what I said. There are some new things there. Have a weird kind of how they cut out real weird ending, but I do think if you have 4 minutes, it's interesting. It's an interesting listen, just to get a quick understanding of what's kind of going on with the economy, which again it's strong. So there's really nothing negative going on with the economy, which is how people are reacting, and 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 things of that nature. But with that being said, that's pretty much the end of my time here for 2018. As always, I really appreciate all the support and everybody coming in, liking the video, or just even viewing the video for a couple of minutes. 2019, we're going to continue this. Again, just thanks for the support. As always, please like, subscribe, share, and comment on the video. And with that being said, happy holidays, and I'll talk to you next year.